Hey everybody, Cowboy here. We have a treat today. During the private live lab session, Algo Cowboy, that's myself, I was able to time an exit out of a gold short, and I timed it really well. I had entered the trade prior to the live session, but as I exited, I explained my logic, and then I have all of the charts over the next hour or two, just a couple of quick clips of them to show you what happened and why it was a good exit, and to show my logic. So it's a great clip. Enjoy it. You see our website at the bottom of the screen. Go ahead and either zap the QR code or just go to the website, check out what we do. And also at the end of the video is more information about how to find us and what we do. In short, we build traders. So if you're interested in that, come see us. Otherwise, enjoy the clip. Nasty bounce. This gold trade's you're looking at a gold trade right now, and it's a liquidity grabber. So if you look at this, I'm going to show you all what discipline looks like. So when you have a trade plan and you stick with the plan, like I have an algorithmic reason to leave this trade if I leave it, right? And that algorithmic reason has not come into play. But let me show you what this trade looked like from a 30-second standpoint, right? So, I mean, this means that every single one of these candles is 30 seconds. You're looking at a 30-second chart, basically. Or is this the 10-second? No, it's a 30. So this is, the first, say, 10, 15 minutes, price just goes straight into profit, right? And then it bounces hard and goes actually into loss. And now it's back into profit, and it keeps getting crazy and not wanting to break this. But the algo says to stay in. So even despite this bounce right here, I was tempted to get out and look for a better entry right here. But the algo was saying I can stay in, so I did, and look what happened. It looks good. So I'm going to take another quick look at the algo because I put a decent amount of money on this gold trade. So let me see if algo says to stay in. Yeah. Actually, let me see what more my profit is, because it is actually signaling a decent time to exit. But if I stay in, it will give me a good basis. Let's see. It's a tough call. Algorithmically, it is a tough call. I'm looking at, if you can see it on the screen, I'm looking at the SMIs, and I'm gonna show you guys part of what's going on with this. So this is the 2-hour chart that we're looking at. I'm going to blow up the SMI on this gold trade. You see how the SMI is tilted down like this? That means very bearish right now, along with a couple of other pieces of the algorithm. And even on the higher time frames, everything is pointing bearish. The problem is that on the, what is this? The 18-minute probably. Let's see. It's not signaling which. Yes, 18-minute chart that I'm going to look at. So functionally, it's a 15-minute chart. The problem is that we're sitting at an SMI dip, and the SMI dips here are pretty powerful. But no, it's saying to stay in. I got to stay in this trade. I really do. Yeah, I think this one's going to go for the finish. The problem is, it already went up to grab liquidity when it went back up into away from profit and into loss. That was the bearish retest, where a lot of times I would enter on that bearish retest, and to show you all that, what that means. From an easier to see standpoint, as price headed down, it actually headed back up, and that was the bearish retest. But right now it's having a real hard time breaking this low right here. It's fighting that low, but high time frame's bearish. So I don't know, man, that's a tough call. My algo's like 50-50 stay in and go. And gold's tricky. Gold likes to jump back up. So I'm going to take it out. I'm taking profit. I'm a 2-to-1 profit right now. So I'm actually at a 2-to-1 profit margin. So let's go ahead and close the position. And then I will re-enter, because it's going to bounce back up. And I'll re-enter with a smaller amount. So that's good. That's a beautiful 2-to-1 that you saw me take. I didn't post it as I was taking it. But I am seeing some metrics that it's kind of creating a double bottom. In fact, not kind of. Let me show you all something here. So this is the 3-minute chart. And what you're looking at is, let's see if I can go roll back. So you have the structure right here, way back here, where price kind of came down. I'll show. Okay, let's Sorry, guys and gals. I'm on a higher time frame. 15-minute chart, right? If you look back, price came down hard on a news event. And when it did, I'm sure this was like whatever, FOMC or something. And you see right there where I drew that line, that created structure back here. Now, price has been on a downtrend ever since, and it really started a hard move down. But gold, kind of like EURUSD, you have to know your asset class, and the only way, or your asset pair in this case, and the only way you can know it is by back testing, right? So when you back test, you understand how something is going to behave, and gold, like EURUSD, does liquidity grabs. And what does that mean? Well, in this case, we know that that structure is there. We know it can bounce off that. And then as price is headed down and it breaks that structure, because there was, let me see here. There were 1, 2, 3, 4 local structure points basically that created this kind of a structure to break. And like we talked about with the Aussie dollar on the super high time frame, you had 4 bounces and each of the recoils was lower and lower and pretty much lower. This one here was a little higher, but overall you're looking at kind of a downward slope like this. And what you're looking at is a bearish descending triangle. Literally, bearish descending triangle. A lot of people would confuse this for a wedge. It's tricky because it kind of wedged out. But if you, okay, so this is a really great example of why you want an algorithm. Because most people would look at this right now from a purely price action standpoint. See that? That's a falling wedge. Falling wedges break bullish. They break upward. Okay. So if you were to just use price action without any kind of algorithm, you would think this was going to break bullish, right? But that wasn't the case. It broke bearish, and I made money on it breaking bearish. And the reason I knew it was going to break bearish was because I have an algorithm that told me what was happening in a higher time frame and some other, metrics. Mathematically, I had data that said it was going to break bearish. And then you come across this right here, this structure that was made back 4th of August, so a few days ago, 4 days ago, and price bounced on that structure. Now, my high time frame algo says, okay, if you stay in this, you'll probably win. But here's a problem. On the, let me get rid of this yellow. Let's just do it this way. Get rid of some of the drawings. Okay, so we talked about that. Now, this structure where I knew price might bounce, the problem is that on the 3-minute time frame, the 18-minute had the SMI that I pointed out earlier, right? So we knew SMI was bottoming out, and it was bottoming out at structure, and then you have this double bottom, definitive double bottom, and it happened right at structure with an 18-minute SMI. I mean, that's like recipe for a move up. And look what happened. I took profit down here and price went all the way back up into loss. So now if everything turns back my way, I can actually re-enter and continue to just soak this trade and rinse the market. Like, I can do that. But look what I just did. I saved myself like hundreds of dollars by doing this. And it's just because I understand price action algorithms, and you got to see me do it live. You got to see me make the decision. So, that's something else, everybody. I mean, that's, look, there are a lot of people who will have a website and say, use my system and you'll get rich and all this, like, kind of scammy stuff, right? How many of them are trading live right in front of you? How many of them are making decisions whilst you watch? This is not something that is terribly common, right? I'm not afraid to take a trade in front of you. I'm not afraid to actually make a decision and show you what happens, for better or for worse. Like my EURUSD trade yesterday, I got into it, it stopped out. I did tell you it was high risk. I told you why it was high risk and why I didn't take a very large trade on it, and it stopped me out. I'm not afraid of that. I know trades lose, but for everyone that loses, I get 2 that wins at least. So you got to see it live. So that's what I got to say about that. And look, as price continues to go against me, I will continue to watch and look for a new entry. Several minutes later, I think gold is actually headed back in my direction. Let's see what Z charts say. Yeah, that was a spike up. I got out before the spike up. I need to zoom out because the screen is acting funky. Just give me a second. 1, 2. Okay. No, I'm going to wait. I mean, it could continue down because it's under a lot of pressure. But I usually, once I exit during this, let me show you guys something. It's a rule I have for the algo. Look, this could continue down, but the reason it would continue down is because it's under kind of extraordinary pressure. So let me zoom in, back in. And the problem with this trade, the problem with going short on this is that you start to build a lot of bullish pressure. That we're in the middle of an 18-minute SMI dip, and it wanted to head back up, and now it's being pressed down. So what you're doing at this point is the market is now kind of holding the cork underwater. And this is what happens during high volatility events. But the longer you stay in the trade in a situation like this while they're pushing the cork down, the harder you're going to fall when the trade comes out. So, you know, you can pick a lane and stay with it and stay in the trade, or you can be smart and just use your algo to get out, and whatever profit you didn't make, you just see, I could have stuck in this. I'd be actually right where I got out. I could enter back in, but now my risk to reward ratio is just terrible. And I cannot enter on an SMI dip like that. On this 18-minute SMI dip, I can't enter on this. It's gonna pop back up, and it's gonna be painful. Once this, I'll look for a re-entry once this makes its way back up. And once it comes back up, and it may go all the way up here, and being held down like it is right now, unless there's extraordinary bearish pressure, it should come back up, and it could go all the way here or not. But once things flip back around after this has gotten out of this oversold area, that's when I'll look to re-enter that short. And I'm not concerned about anything else. It's just, you know, I have tried to get greedy and siphon more profits out of a trade just because it's under a lot of pressure, and that generally doesn't end well. You know, eventually you get busted out of your trade. It's just how, at least that's how it has worked for me in the past. Several more minutes later. Right, so looking at our trade now, what you have seen and what you're seeing is there was a temptation to get back in, right? Price kept heading down, but now look, it's already pushing back up. So there is, again, a reckoning happening where the SMI is now, it's not the SMI, where the SMI is now actually turning back up like I said it would. It's going to leave like I said it would. And there's a decent chance price is going to rotate back up into this area. And when it does, if it rotates down and the rest of the algo says I can re-enter the trade, then I will. So look at that right before your very eyes yet again. Even more minutes later. And here it is about 45 minutes after the show ended, and probably an hour or more after I exited the trade, and gold really has rallied all the way back up, well past my entry. I would have been in profit, and quite frankly, I might have been at a stop loss at this point. I don't have the metrics available, but it just keeps heading up, and I would not be happy if I had stayed in this trade. So the algorithm is doing its job.